G'day folks, welcome back to Pete's Investing. Today is September 2nd, 2023. This is the spot gold price update. On the daily, first off, you can see here after bouncing off this support at 1884, it's made a bit of an advancement, and I've drawn Fibonacci here, and it's meeting some resistance here at the 61% level. Remember, I always say the 61 is a key area. It's either going to reverse from that area significantly, or if it breaks through that, we're going to see further advancements. In this case, I'm suggesting it's probably going to weaken and decline for a couple of reasons. Number one, we've got this inverted cross doji, and that generally means a change in direction of the chart. So we may see it breaking to the downside, and I'll talk about the hourly chart in a second. Plus, you'll see here the CCI is also, even after being advancing, approaching the zero level, it's actually flattening out and potentially starting to turn down. Now, there's no divergence on that as we speak on the daily, but I'll cover that in the hourly again as we move forward. On the stochastic, again, you can see there it's past the midpoint, and it was making further upside, although it's still below this longer term moving average drawn on the stochastic. So again, we may see a bit of a reversal from where we are here because of this inverted cross doji candle. Now, in terms of the hourly chart, this sort of adds to that negative viewpoint at least. We've got a bearish divergence on the hourly. You'll see here that point is lower than that point on the CCI, and the CCI is still declining versus the price. Now, the price has made a slight increase since that was drawn last time, so I'm going to move that there. And you can see there that also applies to that point there. So it's actually still declining versus the price. Now, as well, the stochastic, you can see there it's leveling out and weakening and approaching its moving average. Now, in terms of where to enter short, there's a couple of ways of doing this, and it's a bit subjective, but I'll just give you my method, and you can extrapolate and work out your own way. So I'd like to draw a channel. So from where those highs, the most recent high, to where the divergence started, and draw a channel between some recent touch points. So you can see there that sort of area seems to be the most touch points along those tops and bottoms throughout that channel. So you can see there it's sitting right on that area, and that's possibly an area to go short. In terms of targeting, we will draw a Fibonacci from that low to that high. Now, in terms of targeting, I usually try to take the closest Fibonacci range. So you can see there it's already punctured through the 23%, and we're sitting currently just above it there. So if you're really, really conservative and you want to test this out, I would put a target range between the 23% and the 38%. And I've drawn a midpoint there. It's not a true Fibonacci, but it's 30%, which is a midpoint between the 23 and the 38. So that range would be your minimum target range. Now, if it breaks much lower, and we'll watch this in the coming days, but if it breaks much lower and breaks this 61%, similar to what it did on the, or what it's doing currently on the daily, if it breaks through there, we're going to see obviously a full trend reversal. Otherwise, it may turn up from any of these points. So just be mindful of that. So at the moment, watch this divergence. And that's probably primed for an entry. So yeah, just let me know in the comments if you are looking at that. But I'm not suggesting you trade this. I'm just giving you some ideas on how to approach these divergences. Okay, so we're not giving you financial advice. We're just telling you some prospective ways of approaching these divergences. So to understand further how to play some of these divergence strategies and also trend trading strategies, subscribe to the Patreon page where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.